Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of pound yen GBP JPY for Monday. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro, USD, GBP, USD, Gold, USD, and others. So let's get started. So this is the Forex chart of GBP JPY in front of us right now, and as you can see there, I have got many things on the chart. So let me explain one by one. Usually I prefer to keep my chart clean, but in case of GBP JPY, I can see many things, so I'll be explaining them one by one so that you do not get confused. Okay. So first of all, the last traded price of pound yen is 54.27. Okay, this is the last traded price of GBP JPY, and as you can see that I have also got the Fibonacci retracement here, and considering the present downturn of the market, we can see how beautifully market failed to cross the level of 38.2%, and we saw market going down. And moreover, we also had the trend line acting as dynamic resistance for the market. And if you look at the chart here, then you can see the trend line has been acting as a dynamic resistance for quite some time. So one thing is very much sure, that this trend line is still valid. Okay. As a result, market failed to cross the level, and plus the Fibonacci 38.2% also gave us the additional confirmation. Okay, so on Monday, if market tries to go up again, okay, if market tries to go up again, you must watch the market carefully in this level. Mind my word, though we have resistance, I am not still recommending any sell position for GBP JPY. Okay, you just need to watch the market in this level. Okay, do not take sell position immediately until and unless you see something big. Okay, why? Because though all the things, okay, all the things that we have discussed so far are pointing towards a downside, but if you look at this side of the market here, then you can see that market is constantly forming new lows. Not sorry, lower, higher lows. Yeah, I always get confused. Market is constantly forming higher lows. Market is not crossing the previous lows here. It signifies the increase in buying in the market, the increase in the number of buyers in the market. So this is an indication that there is a possibility of market breaking the resistance and going up as well. And as a result, okay, I have drawn a range here. Okay, let me remove trend line also now. So when market will be in this level around 155, just observe the market and see. Okay, because there is a possibility of market going up as well. So if market breaks the level of 155, then wait for 2 hours, 3 hours, and just try to observe the market and see how the market is doing, how the market is reacting. If you see that market is crossing resistance, buying power is there, market has crossed a big green candle, okay, then that is the confirmation that yes, new buyers have come to the market and market is about to break the resistance, and then you can take a buy position because the resistance will be gone and the resistance will become the new support. Okay, similarly, if market comes down to a level of 153.80, again observe the market. If market comes down to the level of 153.80 and bounces, then you can take a buy position. You can take a buy position as well. But if you see that market is crossing or crushing the resistance and going down further, okay, then that's a complete different scenario. Okay, then that's a complete different scenario. You can take a sell position as well, but for day trading purpose only. Okay, so whatever I have discussed so far are for day trading purpose only. So if market breaks the level of 155 and crosses it with comfortably crosses it, you can take a buy position. And if it breaks the level of 153.80 and goes down, then also you can take a sell position for day trading purpose only, and your target will be 153. Okay, so these are the opportunities for day trading purpose only. Now I would like to take you to the daily chart. Okay. So daily chart has got something interesting. On a daily chart, you can see that we have a doji here. Okay, then we have again a doji kind of a doji here. Okay, so things are quite critical on the daily chart. Okay, not a very good one. Okay, but we have supports from the 50 moving average and 200 moving average here. These are two simple moving averages here. So the blue line is the 50 moving average and the red line is the 200-day moving average. And you can see here market took support on the 200-day moving average. So there is a possibility that if market comes down to the 200 moving average, there is a good possibility of a buy. So if market bounces from the 200 period moving average, you can take a buy. Generally, I do not talk about moving averages much, but one thing we cannot deny that 200 period moving average is highly respected, highly respected indicator around the world in any market of the world. Okay, so there is a possibility that if market comes down to a level of 200 moving average, we can get a buying opportunity for 2 days, 3 days, 4 days. Okay. In addition, 50 moving average is also there. Okay, there is possibility of market bouncing from the 50 moving average as well. In forex market, it works 50 moving average. So if market bounces from 50 moving average, then also you can take a buy position. So these are the trading opportunities that I see on the chart of pound yen, GBP, JPY right now. Hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Bye bye. Take care.